I'm here at Cybos today on the Misys stand discussing the Global Transaction Banking Report. And joining me is Jitesh Malik of Misys, Cindy Murray of Bank of America Merrill Lynch, and Simon Newstead of RBS. Cindy, it seems from the survey report that the majority of banks over the next 3 years, part of their strategy are looking at innovating in new products and services and channels. One of those areas was mobile. But what products and services in particular do you think that transaction banks are looking to add?
Okay, great question. Certainly our clients are really looking for us to offer a different type of solution on the mobile device. So we're not just taking what we offer online and putting it on a mobile or a tablet. The mobile device is really to alert clients that they need to take action. So being able to approve payments on a mobile device, being able to get summary level account information so that a client can understand what their working capital positions are. Those are the types of solutions that we're rolling out on mobile.
Okay.
And I guess an interesting observation is if you think about the growth trend in mobile generally, that's sort of lying behind this customer demand that we're now seeing. Something that RBS is involved in is the World Payments Report, which has just come out for this year. And we've done some trend analysis on the uptake of mobile payments. And we're seeing an annual growth rate now of over 54% per annum, but that's still off a start base that says only 2% of people with mobiles are making mobile payments. So I think whilst it might be difficult to predict the winners and losers in terms of the ultimate solutions, there's a real sense of what's underpinning that client demand and the potential.
And what you're talking about is more on the consumer side
absolutely.
Of doing payments at the point of sale. Now, and from a transaction banking standpoint, certainly we want to offer our merchants that capability. And while there's little traction, I think some of the recent innovations will have traction, and I think other merchants will be looking at the successes and trying to emulate that.
And in terms of the corporate customer demand for mobile channels, is this coming through in kind of direct questions or expectations in your meetings with corporate clients?
Well, certainly many of the global providers have already rolled out the first generation of mobile, and once you roll out the first generation, you begin having discussions with clients and they begin talking about, well, in the second generation, for example, supporting trade. These are things that I would like to see in the second generation, or supporting cards, alerting that one of your individuals needs to have their spending increase because they've gone over their spending limit. So it's really quick information, take action. Those are the types of solutions that our clients want on the mobile device.
I think that's right. And I think that the trend is it's linked to what our kind of corporate treasurer customers are doing for their private banking. So those growth trends that we're seeing in the personal customer market are directly fueling their expectations, because why should they be able to do their personal banking on their mobile device but not be able to authorize their payments, not be able to see their transactions in relation to their professional life? So there's a real kind of linkage in terms of where the demand's coming from.
I think from a technology point of view, the growth of tablets and iPads and now mini iPad has sort of blurred the boundary between what is internet banking and what is mobile banking. And the maturity of mobile banking in retail space, now banks and central banks sort of understand the security model, the two-factor authentication, the end-to-end encryption on mobile devices. So now corporates want the same simple, intuitive interface, as you said, to be able to get their summary, the calendars, the alerts, the capability to see their inward remittances, the documents in the trade space, and they want to do it at the ease, not only on the desk-bound type devices, but also while they are moving mobile, they want to see it on their mobile devices also. So I think this is causing the more requirement, and now when we speak to banks, previously the corporates were just saying we want e-banking or ERP integration as one of the transaction banking services, but now more and more corporates are demanding mobile as part of the bank's offering, I believe.
Jitesh, one of the other questions in the survey, looking at the strategy, was asking about whether the transaction banks are looking to attract more corporate customers, and less than half said that they were as an immediate strategy in the next 12 months. Why do you think this might be?
Well, it's a very good trend. So when we did the survey with you in 2010, 57% of the banks said they are merging cash, trade finance and payment into transaction banking space. I think the last year the percentage grew from 57 to around 77%, and this year 81% of the banks responded that they have merged cash and trade and payments into transaction banking, and 9% of the banks are in process. So one of the major motivation is to be able to cross-sell in the same customer base, and the other motivations are to increase the operational efficiencies and reduce cost of ownership. So I think acquiring new customer is roughly 3 times more expensive than selling a different service into the same customer base, and having a deeper customer wallet share is the key for this trend. And I think that's why capability to launch new products and services, provide better customer service, the capability to deal better with regulation is taking more priority than acquiring a new customer, because the game plan is to cross-sell in the same customer base.
Cindy, is this something that you're seeing as well?
Oh, absolutely. I think increasing share of wallet is critical. So you're going to be looking at those corporate clients and determining where you can increase share of wallet globally. What region do you want to focus on? I also think there's huge opportunity within the middle market, particularly middle market clients are challenged with global, and they're certainly moving their operations globally, and they certainly need a banking partner to help them solve those types of solutions and provide capabilities that they may not even know they need. So I think there's a lot of opportunity to acquire new middle market clients, at the same time also cross-sell to the corporate clients and the middle market clients. So I think there is an opportunity to grow the business and to do the acquisitions.
Okay. So I mean, everybody knows that regulatory compliance comes at a cost, but there's also a factor that some regulation can be seen as limiting revenue growth opportunities, and that was one kind of area that came through strongly in the report. How are banks dealing with this, and in what ways are they seeing limitations to their revenue opportunities?
Well, I think that the question of how, if you sort of limit this discussion to transaction banking regulation, as we all know, that there is a lot of individual regulations that we're having to kind of navigate our way through as participants in the industry. So that's whether we're looking globally, Basel III being the most obvious example, regionally, whether it's Dodd-Frank in the US, whether it's SEPA in the EU, or nationally, we're seeing an increasing number of pieces of regulation. I think in terms of the strategy for dealing with that, I think that there's a couple of sort of key kind of lessons, if you like, from recent experiences, sort of just looking at the number of pieces of regulation out there. One is the need to sort of take a real holistic view, rather than looking at an individual piece of regulation and saying, right, well, what's the impact in this domain for this product group? It's kind of collating it all together, doing a real picture of what it means for the entirety of your business and your clients' businesses across the footprint in which you're operating in. And I think the second piece is understanding and making sense of the drivers underpinning the regulations. And again, that's something that we've done certainly in a payments context in the World Payments Report again, where we've mapped 32 individual pieces of regulation and clustered them against the different drivers, be that systemic risk reduction, be that innovation, or one of the other sort of key regulatory drivers. And I think there's value in taking that approach, because yes, the costs of compliance are going up. They're clearly using significant amounts of everybody's available investment dollars, but equally there are opportunities, there is innovation coming on the back of many of these pieces of regulation, but the trick there is to take this holistic approach.
Well, I think an example of being innovative is, if you take Dodd-Frank as an example, certainly, the spirit of the regulation we support, but it's how you implement it that is a technology challenge. However, at Bank of America, certainly we have to be compliant. We developed the technological solution, but now we can look at other FIs that may not have the ability to develop the technological solution. So how do you sell the Dodd-Frank solution to our FI clients? So there you take an opportunity and you say, the compliance requirement is very difficult from a technology standpoint. We need to invest in it because we have so many consumers as customers at Bank of America. How can we then leverage this and offer a solution to the other FIs that may not have the capabilities to make that kind of investment?
So you can offset the cost and kind of turn that into a revenue opportunity.
Absolutely.
Jitesh, one of the other questions in the survey looked at the rise of open account trade, which is increasing more in the Americas and Europe than it is in Asia Pacific, but nonetheless globally is on the rise. Do you think this will be accelerated by the ICC bank payment obligation instrument? And what would this mean for supply chain finance solutions offered by banks?
Certainly. Now, ICC BPO is a very, very innovative product because it provides you the payment guarantee advantages of letter of credits as well as the operational efficiency of the open account world, because bank payment obligation is irrevocable undertaking from bank A to bank B that a payment would be made in future provided the data, not the document, are matched based on the engine which is set on ICC based rules. Now, you're correct that the growth might not be that much in Asia, because in Asia still most of the SMEs are still served by domestic tier 2 type banks, and where the payment guarantee is more important than the operational efficiencies or reduced cost of open account. Now, certainly with ICC endorsing somewhere in next quarter 2013, this trend will change. So if you see globally, 29% of the banks last year said they see a growth in open account, and this year 40% of the banks said they see a growth in open account. And if you also follow the recent ICC survey for trade finance, 2010 the trade in goods grew by 20%. Last year it grew by around 6.6%. However, SWIFT volumes, which is mainly of category 7 and category 4, reduced by 2.3%, which means globally you can see open account transactions are increasing, and certainly BPO, which marry the benefit of LCs and open account world, will make a change. And if you also see the next question, where 35% of the banks says they would like to change their supply chain, which is in a direct impact of BPO, because BPO will force them to change their supply chain finance solutions, basically.
Okay. One of the other question areas in the survey looked at payments infrastructures and what are the major headaches there. And as has been the case probably for decades, changing systems to deal with changing messaging standards continues to be a major hassle for banks. Why do you think that it does continue to be such a problem, and what's the status of industry collaboration and internal bank programs to try and address this problem?
Well, certainly because there's so many formats. So if you're a global bank, you're supporting 300 different types of payment formats. There's been a lot of focus on ISO. There's been a lot of focus, certainly SEPA, using the ISO formats, but there are variations. So I think there has been good traction and collaboration, and SWIFT has been championing this, is to work with the different FIs, to work with CGI and really define the standards around the different ISO standards or the ISO formats. It's going to take a long time before every clearing network is going to adopt a single format. Therefore, banks will continue to have to support SWIFT, ISO, NACHA, X12. That's the challenge. But there are better tools today to do data transformation. It's much easier for the banks to support clients that aren't capable of supporting the standards so that we can do the data translation. But I do think there's been some good traction in the last couple of years, at least defining the standards.
Yeah, I'd agree with that. I think sort of standardization of standards, if that makes sense, it's an inexorable trend, and everybody would agree, but we're kind of proving over the last few years it's a very slow process. I mean, if you take SEPA, which you've mentioned as an example, we're 10 years into the SEPA project, and it's sort of coming to fruition in the sense that by February 2014, the market will have moved to SEPA credit transfers and SEPA direct debits, but not necessarily in that one step to a single view of the underpinning technical standard. And I think that'll take a little bit longer to sort of move away from, I mean, some have said there are up to 300 very slightly different variants of the SEPA message, whether it's something in the header, whether it's small changes, but important ones. It's going to take a little bit longer to sort of go from that hugely important first step of moving to the schemes, and that shouldn't be underestimated, but to move to a single version of the truth in terms of the standards. And if you then play that out across the global stage, I think there's a clear business case. So if you look at RBS, we're in 38 countries. There is a clear business case for us to be able to have more common solutions, more common platforms, and equally that's the requirement coming through very strongly from our customer base. They don't want to deal with the different formats. So I think there is an understanding of the case. It's just not that easy to move forward quickly, but I think the trend's clear.
Well, and I think, you know, the trend is clear. Everyone is moving to ISO. You can take Singapore as an example. And certainly SEPA as an example. I know that in the US, Notch is now looking at an ISO type payment.
Canadian Payment Association are trying to put both high value as well as low value on ISO 20022. So I think it's a slow process, but certainly I think we are reaching to the standardization, as you said. So I think the big question is whether to have two standards, one for high value or one for low value, or have everything on ISO 20022 because it has the data and the technology, which you rightly said, the XML parsers are there, which are fast enough to do it on both on a real-time basis, both the high value as well as low value. So I think the big question is to continue moving Swift on RTGS and ACH on ISO 20022, or put them both on one single rail of ISO 20022. That's the future, I believe.
And you do have limitations in terms of the clearing networks.
Yeah.
So certain clearing networks can only handle so many characters, and our clients want more information, not less. So that's why we do need to move to an ISO standard where we can provide much more robust information to accompany the payment.
Certainly in Asia is big change. Indonesia is moving RTGS to Swift. Singapore, as you rightly said, the debits and the low value payments on a real-time basis on ISO 20022. CNAPs in China are also having discussions to go towards ISO 20022. So I think, yes, certainly industry is moving towards the standard now.
Okay. Well, thanks very much for your time. Hopefully we'll report some progress on all of these issues in the same report next year, and perhaps we might speak to you again then.
Thank you very much.
Thanks a lot.
Thanks, Elton.